Coming out of 2021, we all had great hope that with the new year we'd see our lives and the real estate market return back to normal. Standing here in February of 2022, I could unfortunately say that this has not been the case. In fact, after the first month of this year, if anything, it feels like a total deja vu of where we were this time last year. I'm Adina Dragasanu with Oakland Realty here with your February 2022 market update. Let's jump right into the stats and take a look at what's happening with sales, inventory, and pricing. Home sales in our region actually declined in January relative to December about 4%, and they were down 15% relative to January of last year. However, buyer demand continues to remain elevated above historical averages, with the total number of sales up 25% relative to the 10-year sales average for the month. With home sales down relative to last year and last month, why would prices continue to escalate? The answer to that is low inventory. New inventory continues to lag behind buyer demand, and the total inventory we're seeing in our marketplace right now is about half of what we should be seeing for a healthy market. And it's this mismatch between buyer demand and the supply of homes available for sale that's fueling the bidding wars across our region. Throughout the month, we started seeing a return back to the crazy multiple offer situations we were seeing in the first quarter of last year, with 20 plus offers coming in on some properties and new price records being set in many neighborhoods. This brings us to our sales to active listings ratio, which is the leading indicator showing us if prices are on their way up or down. And for the month of January, the sales to active listings ratio was 40%. Analysts say that we start seeing upward pressure on prices when those ratios over 20% for a sustained period of time. If we look at this by property type, we see that the ratio is currently at 28% for detached homes, 52% for townhomes, and 50% for condos. Comparing these ratios across the property types relative to what we were seeing this time last year, we see that the biggest change has been in the condo apartment segment. The detached segment has remained almost unchanged. Townhomes have continued to increase, but it's the condo apartment segment that's seen the biggest growth, with over 20 basis points increase in the sales to active listings ratio. And while we see this return back to condos across our region, looking specifically at the downtown market, we see that inventory levels are the lowest that we've seen since before the pandemic. And this return back to the condo market is a trend we'll likely continue to see throughout 2022. So let's take a look at how this has been impacting prices. The HPI composite benchmark price for all property types is currently at $1,255,000. This is up 2% relative to December and up 18.5% relative to January of last year. Let's take a look at how this breaks down by property type. The benchmark price for detached homes is currently at $1,953,000. This is up 2.2% relative to December and up 23% relative to January. For townhomes and attached homes, the benchmark price is currently at $1,029,500 and is up 2.5% relative to December and up over 24% relative to January. And for condo apartment properties, the benchmark price is currently at $775,700. This is up 1.8% relative to December, and it's up 14% relative to January of last year. So what lies ahead for us in the market, and what does this mean for you? As you've seen, the biggest challenge we're currently facing in the market is the lack of inventory. And we've already started seeing increasing levels of inventory coming onto the market the last few weeks. If this continues, it will ease off some of the pressure that we're seeing. In addition to this, we're obviously expecting interest rates to increase this year, which will likely decrease affordability for some buyers, and again, possibly ease off some of the pent-up demand that we've been seeing. It's very likely that as we enter the second half of this year, we'll start seeing activity return back to more normal levels. But then again, if there's anything we really learned in the last 2 years, is that anything could happen. So what does this mean for you? Well, if you're a buyer looking to purchase in this market, as I've said before, you need to be working with a great realtor and a great mortgage professional who could help you win against your competition and come out ahead. If you own property and you've been thinking of selling or moving up in the market, these are some of the best conditions and the highest prices we've ever seen sellers capturing in this market. So if you know someone who's been thinking of selling, have them get in touch with us so we can help them create their plan to take advantage of this market. That's it for now. If you have any questions about the market, feel free to reach out anytime, and be sure to follow me on Instagram, adina.yvr, to stay up to date with what's going on in the market. Have a great rest of the month, and I'll see you in March.